How's it going, everyone? Welcome to the weekly trading review for the week of June 6th. So this week I had 9 trades and 1 short call against my long swing. So technically 10 closed positions, but I'm not counting the diagonal. 9 trades, 4 swing trades, 5 day trades. On the swings, I had 3 wins, 0 losses, and 1 scratch. On the day trades, I had 2 wins, 0 losses, and 3 scratches. And on the diagonal, I took a win on that position. So let's go over the market first. I'm going to go over the swing trades. I'll finish up with the day trades, and then I'll talk about my open position in Qubit, which I am in from, I believe, last week, or I think the week before. But that position has come around. So zooming in, let's just look at the SPY long-term context here, and let me just maybe take off some of these indicators for right now. Clean chart. All right. SPY is surging up here. We had this long move down. We had this big bounce up. And to me, this is a very neutral situation on a long-term technical basis. A lot of the pros have more bearish outlook on the fundamental basis. I share that to some degree, but I don't have the same conviction as them, which is why I'm not taking certain trades that they're in, namely long-term bearish swing positions on SPY. Now, given that, right, for long-term bias is neutral, then we can't take any aggressive swing positions in either direction. On the short-term side, if there's a trend, we can take shorter-term swings. So there was a pretty nice trend for the kind of second half of April here going into the first half of May. So this nice 4-week period here, we got a dip, which if I put that up, tests this 200 and 100-day moving average. It also comes back and tests this resistance level that has now become support. That was a pretty big line in the sand because that was the pivot high. If you see here, 576.41, and this low here, 575.60. So pretty much came here, touched that moving average. We bounced off that, and SPY has made a new high. So the shorter term trend is mildly bullish, but it's not very aggressively bullish. And the reason you can tell is if you just look at the price action from this week versus this following week after the rebound, right? We got the strong rebound, and we spent a lot of days just kind of chopping around. You know, we get a test, we rally up, we get a test, we rally up. So in my opinion, you don't really want to chase these rally ups. You want to get in on these dips and sell out kind of when the market pokes back up. So a lot of short-term trading, overnight swings, couple of day swings. There have been some really nice stocks that have been surging. Roblox is one of them that I regret taking a small win on because that stock is up more than $10 from my entry. So that happens from time to time. But we don't have a strong market conviction, and I'm mildly bullish. But I'm also fairly guarded right now, and I don't want to be loaded up on swings at too much in any given time. The reason why is that when you get these sort of kind of compressed price action here, you're sort of in this range. We're back in this range that we were in all the way from November, right? This horizontal trading range, we're back in here, and the action has got very choppy and compressed. There's not a ton of room to the upside, right? We're kind of capping out at 610 over here. That's the kind of the upside that I see, 610. Maybe you can poke the all-time high at 613, but really 610 is that line of the sand. 600 is another line of the sand that we're poking. We rejected off a little bit today. But this move up has just been pretty wimpy, right? It's not been sort of surging where there's like candles, pause, move up, right, test, move up, gap. And all these gaps have been on news, right? There's been news releases, compress, pop up on a positive news release. We might get a follow through, retest, and a breakout. So, yeah, I mean, to me, this is not a place where I want to be in a whole bunch of long swings and then just have a red candle on news take out basically 2 weeks worth of gains in a single day, right? That's what, if you look at how this pattern unfolds, that's pretty common, especially here, right? Here, there's a more of a bullish trend happening. Here, it's like, okay, look, we have this tiny compressed ranges. Market's floating up. It's barely making a new high, and then it sort of starts to struggle. FOMC day, this entire move, right? This whole move might as well just have not happened, right? That's how much we got erased. Same thing over here. We're in this choppy compression range here, mildly bearish, then becomes mildly bullish. We're getting gaps popping up, and you see that institutions are just unloading at this level. And then we finally get the breakdown over here, the sell-off. That's pretty strong. We get the bounce here, and then we move to the downside. But we have a lot of net momentum here in the market from day to day, and you have a chance to enter overnight swings. You have a chance to enter day trades here on pop, so you can really favor the short side on this move. And in this move, you should really be favoring the long side for the most part. There's a couple of shorts in there. If you're a pro, you can take a lot more shorts, but for me, 95% plus of my trades have all been on the long side, trading with the market and not trading against the market. So that's sort of the context. Now let's zoom into just this week, what's going on here. I'm going to just keep it clean on the charts, and then when we get to the day-to-day, we can add back in some of the information. So last week, we got this pop-up, and then a kind of choppy move here, testing this gap. It held a couple of times. On Monday, we had a test of that gap. We rallied up. It wasn't a very strong rally for most of the day. June, on the 3rd, we actually had a pretty decent organization move, and then we pulled back. And on that pullback is where I took a couple of swing longs that I profited on the 4th. LPT day on the 4th. Choppy bearish price action. There was a lot of news with Musk and Trump, and Tesla was very, very weak this day. That's bringing down some of the market. There's just also a lot of volatility, so it was sort of a bearish start. It was a tricky day where it started off bullish because we got this pop over here. We got a really deep drop that made me more neutral, and then as the day went on, you get progressively more bearish until you could actually take advantage of this price action. We got a fairly inline jobs number. I think the main reason the market popped was, it was inline, so it wasn't, to me that tells me that, okay, like the market is maybe pricing in bad news, and when the news comes in as expected, then we actually get a decent rally. We held all those gains from the from the pop, which is important. This is a stubborn move lower, which means it's unlikely to fill. These gap fills that happen usually happen much quicker. So if we get this red candle, we're back in this range, right? In the first 30 minutes, right? First 30 minutes, we're holding in this range, and we're attacking it pretty strongly here. When it's stubborn like this, it's already the first half of the day. We're not even able to get halfway through. We're not likely to actually keep going and fill in the gap. So had some two-sided price action today and yesterday. What does that tell us? Well, we know that sellers have been showing their hands here. After this move up, we've been unloading around 600, right? Which sellers took a shot over here, poked back up to 600, and we weren't able to advance. We weren't able to get knocked down, which is mildly bullish, but weren't able to advance. So it's just sort of hit and run. You want to be pretty guarded in this environment, and I think it's easy to just get kind of chopped around, right? If you're chasing moves late, you have to wait for the contra move and get in on the contra move, right? Because moves go up, you make a trend, there's no follow through, and you got to get in again if you're favoring one side, you have to wait for the pullback of that side, the contra move, and then you get in. So in this case, if you're favoring the long side, you wait for this move to unfold. When it starts to stall here and pokes through, given that it's a bearish channel, you can trade the long side over here, and then when that stalls, you can take gains near the high of the day. Okay, so let's go over the swing trades this week. I'm going to put these drawings up over here. So first swing trade that I took was STX. I took this on the 3rd, and I took it pretty much near the close. I took it at 123.15, and here was SPY at that time. So on this daily chart, SPY was looking decent. I like how it closed above this prior high. So you can see this pivot high of 595.54. We got a close 596.09. So just kind of above it. Not a super strong close, but we did poke above it. This is a pretty strong chart. Ton of momentum since the 4th. Got through all of his SMAs. Just a beautiful looking chart. And we had a nice compression break, pull back to the 8 EMA, and then pop out of that box here. So On the intraday entry, because I think this is important, I'm going to go to the M5 chart on both. So here was the setup that I saw, right? SPY is making this really, really nice strong move. I'm like, this thing is going to dip, right? Like it's continuing up higher and higher and higher and higher. It's going to dip, and this is a decent move, so I can probably catch a nice entry point on that dip. So we got the dip. We're at VWAP. So not a bad time to go long. SDX dips, and it starts to find some support kind of around here, right, towards the end of the day. So we bounce off VWAP, we form a double bottom here, and this is kind of where I get in the trade. I was trying to bid at $23, I didn't quite get it. So, but I got into $23.15 pretty much at the end of the day. But I got in after this move. I didn't get in at like $23.80. I waited for this dip to come in, and I probably could even got a better price at VWAP if I really wanted to, because that provided some pretty nice support over here. But yeah, you want to get in earlier, because now you have a fresh move to work with, and you're getting it at a much better price versus chasing over here. You're basically saving like at least $1 or more on this guy. So really nice, and this is a beautiful consistent pattern right here. Just many consecutive green candles, just touches to the 8 EMA, and then it kind of stalls for a while, so you have time to get out of this trade if you're in it a lot earlier. So yeah, just absolutely beautiful move. We had a market cooperating, you had a nice stock cooperating. It broke through that high of the day pretty early. So if we just look at, just these, kind of just these compression highs over here, just on an M5 chart, right? You have these compression highs. It's poking through, and you kind of get this break of this bullish channel to the upside. So kind of this huge, almost buying climax if you zoom out a little bit more to an M15 or an M30 chart. But yeah, I mean, it just kind of broke through these compression highs, kind of test a couple of times. You finally broke through, retested, and then off to the races. So took that chart, and then I got out over here. So I got in at, let me just go pull up this chart here. I went swing long 30 shares at 23.15. The next day I took gains at 126.53. I got out over here at the compression. It was holding VWAP pretty well, but market was fairly LPTE, and I figured I had some nice gains, so I might as well take them. I was targeting anywhere between 126 to 127, so it was kind of smack down in the middle. Stock did rally a little bit more from here on out. You can see that we had some choppy conditions. It was holding up pretty well. So there was a little bit more you could have squeezed. Like I could have said, all right, maybe I could have squeezed another $3 on this, but I'm not trying to push each play too much. I'm just taking those base hits and getting back to the sidelines. So that was STX. Pretty nice swing. Just worked immediately. Took profits the next day. That's kind of really those beautiful trades where it's like you got a good entry, got a great pick, produced immediately, and you took some gains. Next one that I took was AEVA, and I took this on the 3rd as well. I believe Dave had called this out. He got a little bit of an earlier entry, probably around the $19 level. So broke through this compression level right here. Beautiful chart, right? Massive move up here, compressed, broke it to the upside. So here's your second entry on the 6th. Rise it up. We got this post earnings move here. We dip, compress a little bit, and then we break out of compression through this dip. So this just absolutely picture perfect setup here. I got in at 1965, which does sound like a year. I got in, yep, so we got this move here, and I got in somewhere right over here towards the end of the day here. Now, I was bidding like 1940, but I was trying to bid like 1900. I didn't get my fill. If I had waited the next day, I actually would have gotten a fill, so that might be something I consider walkaway analysis. See if the stock, if I can catch a better bid on the stock, and then, yeah, just kind of just take it up higher. So, yeah, AEVA is looking pretty, it was looking pretty nice here. We got a test, rallied up higher. On Thursday, it did sell off quite a bit, but I was I had shares. I was willing to hold it. By the way, I took 50 shares of this guy at 1956. And then on Friday, it ended up rallying, tested this level, poked back a little bit, tested it again, and it wasn't able to really break through over here. And when it started to stop breaking through, I figured this is a pretty good time to take gains. So I took gains at 20.96. So that is about $1.50 per share. I got on AEVA. It could still go a little bit higher, but again, I'm not crazy about the market. I took a nice base hit, and I didn't want to be in too many swing positions. Next one I took was Net. And this one, I think Ali O had called this out in the one option chat, so he took it over here. Beautiful, really nice, consistent price action chart. Broke through this upward sloping trend line through some of these key levels here. Had room to the high at 176. So I took it at, I actually didn't take it on this day because it closed at, oh no, sorry, I think was it this day? It was June 3rd. That's right. It was June 3rd where it really started to peak out of that compression and rally over here. So I also took it on June 3rd. Or sorry, I bid for it on June 3rd, but I ended up actually catching it on June 4th. So let me zoom into this chart and show you where I caught it. So it popped up high over here on the D1 chart. You can see that even on the M5 chart, right? If I just zoom out a little bit, that it makes big moves and then it'll like chop back into these moves, right? So if I take it here, I can just bid for it at VWAP somewhere and I'll probably catch it at 163.50, right? So I can get a pretty nice entry on these bids. So that's what I did, where I bid at 171.50 and I got filled on this poke at 10.05, right? So I basically got a really great price earlier over here. And then the stock rallied up a lot higher. Stock rallied up a lot higher and kind of compressed a little bit on the 4th over here, was doing okay, and it started to poke off a little bit at 12 o'clock. And where was I at 12? Yeah, at 12, the market was kind of testing some support here. And I was like, well, okay, it's made a big run. We have a decent chance of pulling back, although we haven't poked the low of the day. I have a little bit of profit in here, so I might as well just take it. And I took some profits in this stock at 172.91. So $1.41 per share. I was long 30 shares of this stock, so it wasn't a crazy profit, but take some gains. Next day it soared up insanely, so I was like, damn, I really wish I had held it up through there, at least take it up to 176 if I can. And it was finding some resistance around the $180 level. So again, can't catch them all. You're going to miss some opportunities. And for me, it was just protecting against any downside risk in the market. And because of that, that cost me some upside gain. Okay. So those were there's actually one more swing trade that I took, which was in DJT. And this was actually, it ended up being a day trade, just like Net, where Net was intended as a swing trade, but I closed it the same day. So, but in my journal, I marked those as a swing trade because that was my intention. And then, something changed where I figured I could just take profits in the same day. So here's the chart on DJT when I took it. Pretty bearish chart. Nice triple top at the SMAs, broke through the 50. And as the market's rallying, right, this stock has not been able to get above that 50-day SMA. So really, really nice gain or nice move on that stock. So going to the M5 chart here, I was like, all right, look, DJT looks pretty good. I'm fine with taking an overnight PDS on this guy. And let me get into the price action for this day because that was kind of important. We had some two-sided price action here, and initially we got this bearish move, right, gap up, bearish move. We rallied up higher to a new high of the day. So at this point, you would be mildly bullish because we made a new high. But considering the two-sided price action, considering this move, and considering that we had some news, and also this is kind of like a choppy move. It's not very strong, right? It's a pop, pause, versus a move like this, which is just steadily grinding. This is vulnerable to a pullback, and you want to wait for that dip. So here you're waiting for the dip, and you're getting, all right, this is a decent dip. You're just waiting for something to maybe break above this high here, and then we actually start to trickle in a little bit lower, long candle, and we poke and make a higher low. So at this point, you would be neutral because both sides have taken a shot, and they made pretty deep cuts. But neutral, a little bit of a bullish bias because this low of the day has held. Now we're rallying up higher, this is looking good. And then we start to stall at VWAP over here, and we start to roll over pretty quickly. This is actually a pretty nice short, not a bad short entry in my opinion, because one, this bounce was pretty quickly erased by this long red candle. We're through VWAP. We did not get above the open of this candle, and we preserved more than half of this move. This also came in, kind of around over here. So pretty bearish move. Another test of the low. Poke through here, trigger some sell stops. You could take some gains on this candle, get off to the sidelines, wait for the second bounce. And at this point, you would be bearish because there's a couple of pokes here. There's an AVWAP from a couple of days ago that's coming into play. And when the market starts to stall here, there's a pretty good chance that this support is going to break, and we're going to start to roll over. And that's pretty much what happened here. We broke through, rolled over, and you could have taken some pretty nice gains in the position. So given all that, on over here, I was looking for some shorts. And one short that came to mind was DJT because we had a break. It was a really nice T1 chart. We got a tall bounce, but it's kind of a choppy guy. And in this area over here, market was popping and DJT was not popping. So I took the, over here, I took this 21, I think I took the 20.5 PDS expiring this week, so June 6th. For a 23-cent debit. The bid-ask spreads were kind of a mess over here. I took two contracts of that because I didn't want to, like with PDSs, I'm not super comfortable with them, so I don't like having time as a constraint I have to worry about too much. And with PDS, you have to nail the move in the right amount of time. There's a couple times where my thesis is right, but I ran out of time and my PDS expired worthless. So I really hate being in those situations. That's why I size this for like a 1/5 size, like just not anything really, or no, it wasn't even 1/5. It was like 1/10 size. Yeah, 1/10 size. Really, really small. I probably could have sized it to maybe a 1/4. Maybe that's something I should consider in the future. But took it over here. Nice bearish candle. And I think I took it somewhere around like a little before 3. I think I took it on this candle here at 3. And then we get a move and we get this giant, massive long candle. And I have a working order to take like 30% on this trade. And it was getting stubborn, and moved up to like, so I got in at 23 cents debit. I was trying to get out at 30 cents credit. And I did end up getting filled on this candle. I think on this candle I somehow got filled. Yeah, I mean, I took the gain. I got out of the position. There was a big news that went in my favor. And the stock ended up rebounding the next day. But yeah, a massive drop like that, a massive candle, big hammer here. I'm probably going to get out of the trade. And especially on a PDS where it's a little bit tighter, even though the liquidity is pretty good on this guy, the bid-ask spreads were a little bit stubborn. So, I had my order working and it got filled. I'm going to leave it at that. So that was DJT. Technically, because the profits were so small, it ended up counting as a scratch for me, because for me, if I'm risking $300 as my max risk, anything that is less than $30, win or loss, to me I consider a scratch. It does move the needle, but just not that much. So with DJT, ended up being a $14 overall net gain, which technically counts as a scratch, but is actually a 30% win on the position. So that was just more a matter of me sizing it. Potentially another 3 contracts, and that would have been a win. Okay, so let's go to the day trades this week. I had 4 day trades, and let's start with the first one, which was DLTR. I took a day trade long here on the 3rd. This was a pretty solid trade, but the one thing that was suspicious to me was I took it late in the day and it had earnings coming up um, before the open the next day. So I obviously could not hold it overnight, and they could be a little wonky into earnings. So I had to be careful with that. So this was, I took it on, yes, the 2nd over here when SPY was rallying up. Oh, no, I'm sorry. I took it on the 3rd. My bad. I did not take any day trades on the 2nd. I did take it on the 3rd. And let's just go to the M5 chart. Okay. So here is the M5 chart for DLTR. Pretty nice chart. And what I liked is that it had a nice little move up here, kind of compressed a little bit, and then it popped up, especially at 215. Now, what's the market doing here at 215? Market is pulling back. This stock is holding the gains. Okay, so this is a pretty nice point. Maybe I can grab, like, what was I targeting on this guy? I'm going to check my notes right here. I was targeting, like, I was like, all right, I can probably conservatively get, like, 50 cents on this stock, which I almost hit. And then if it ends up working out pretty well, we get a nice move up. I can probably take $1, so something like that. So I went long 150 shares at 96.69. So 150 shares at 96.69. I kind of popped up over here. The stock moved, pulled back a little bit, and I'm leading on this prior compression, right? This is sort of minor M5 resistance, right? We broke through it, came back to retest it, poked above it, kind of engulfed it, but, you know, market's not really doing anything. Stock is not really doing anything, so I ended up just scratching out the trade here at 96.58, so it was 11 cents loss, pretty much a scratch here, because, yeah, stock just wasn't really moving, and I didn't have a lot of time at the end of the day, so it needed to produce quickly, and if it didn't, then I'm out of the trade. So I liked it. I think an improvement. One thing I'm considering here, I haven't thought about it too much, is, you know, if you're in the one option chat, SH Kalash, talking about kind of bidding lower, getting in at that 8 EMA, which is something I have done in the past before, but I haven't done consistently. And as I'm thinking about what I want to improve for Q3, which I'll get to when I make the official Q3 trading review video, I'm thinking about how can I get more out of my trades. And, you know, continue to improve as a trader. So that might be one area that I'll consider. So I might have a potentially better entry where it's like you get a slightly better entry and those small scratch losses become small scratch wins. Kind of a tiny moving the needle sort of thing. But, you know, didn't double guess it. I just kind of took it at the clean break here. Wasn't too much above this prior high. So was pretty happy with that. Okay. So that was DLTR. That was a scratch. And the next trade I took was on the 4th. So let's look at SPY on the 4th, which I took 2 trades here. So first trade I took was Meta. And I'd call this out in the one option chat. So I took this trade. Yeah, it was the 4th here. Beautiful M5 setup. It had broken through this high minus trend line. Broken out of this compression, sort of this like cup and handle kind of coming up over here. Really nice day trade. A little bit extended to swing in my opinion for an EMA. It could work, but wasn't crazy about swinging it. SPY LPTE day, and it was pulling back here, testing the downside. As long as the downside held, you could get long into a stock. So here is Meta, massive move up, pulls back with the market. There's some correlation because it's a MAG 7, and I think I might put a chat in the link or something, but I had posted a chat about how I set alerts for this stock where it rises up higher, kind of choppy, right? You can see how it's choppy. Meta is a choppy stock, so you want to get in on the dips, and it'll really rip up on the dips. Netflix is the same way. It'll come back here, test VWAP, and it'll rip up on these dips. So this stock coming back down. I put a downward sloping trend line here, which got breached. It got breached on this candle. If you put it in like here. Right, so it got breached on this candle, but you see this candle ended up as a hammer. Not really a good close in my opinion. And if you're also looking at this chart, see how this low over here at 1210 was lower than this low at 1050? I don't like that, right? I need to see higher lows. So if we got a higher low and then we bounced off, okay, we are good to go. But we still made a lower low, so I need to see that little double bottom and pivot here. So we get the bullish hammer here, and look at this. This low is 679.75. This low 679.82. 7 cents higher. You might think, all right, just 7 cents on a $700 stock, right? Like, who cares? But that is important, right? This is just a little thing. Buyers are just scooping it up just a little bit higher, right? Just a little bit higher. Nice hammer. And then we get a nice pop through VWAP, clean break of the line, and we're above this little pivot high that we once broke through. We broke it through pretty convincingly. So got in over here at 682.50. And yeah, got filled in this candle, and it rallied up over here, and it started to stall over here. So I took gains at 684. I was long 75 shares. And if you look at the entry here, here's the entry at 1245. Here's the market at 1245, right? So this is beautiful entry where you get the market working in your favor, get the stock working in your favor, and you're off to the races. Now, in hindsight, you could say, damn, I really left a lot of money on the table, right? Especially when we broke through this high of the day, when we're starting to get a bullish kind of buying climax over here. We stop out here. You see see this really high volume doji, right? That's higher than this bar. That tells us that there's buyer and seller profit taking that's getting offset. And then when we start to kind of drift lower here, right, get below that 8 EMA, here's another warning sign, right? We're starting to close below this prior day high that we need to lean on as support. So another thing you got to watch out for. But that's a pretty nice time to take gains. So I got a really great pick, really good entry. Again, it's one of those things this week where it's like a lot of trades. If I'd held longer, I would have made a bunch more money, but I just didn't have the market confidence to really stick with them. And that's kind of the trade-off you make, right? Where there's certain trades where if you hold longer, you're going to take a loss, but if you hold longer, you take a bigger win. So the time you stay in the trade is going to skew your risk-reward ratio. My time in trades is just a lot smaller, so my wins are smaller, but my losses are also a lot smaller. Okay, so that was Meta. So took a nice gain there, $1.50 gain per share. Next one is Snow. And I took, I think Spectre in the one option chat had called out Snow. So he got a really nice entry on this. Now Snow, let me go to the D1 chart first. M5 is not your typical stock, but D1 chart here just kind of grinding up. You know, pretty orderly price action, strong move post earnings. Actually, a pretty nice candidate for a weekly at the money. It's actually pretty. I'm gonna just gonna check it right now. I mean, I can't trade it obviously, but if I just do all strikes, is it not coming up? I probably would have to check Tradier here. Okay, I'm gonna pull up the Tradier in a second because my curiosity has peaked. But if you took a weekly at the money, because it has a bit of a bullish trend, you could probably be short the I'll probably go like 8 weeks out, so maybe the 6 to 8 weeks out. So you could maybe do the 7/18 puts. I might do like, let's just try that. So 7/18, you'd buy the 200 puts, and then you would sell this week's probably puts. You can maybe do, if you want to be conservative, you can do 210.50. You want to get at least $1 premium, so probably I guess the 210s would be the one you'd do. That's a nice, yeah, that's a pretty nice move on Snow. That is a pretty nice move on this stock. You can make your money back and make a nice profit in 2 weeks. So that's your pick for you, Snow weekly at the money here. Anyways, so after that distraction, so Snow was nice. It had gapped up, it had come back, tested the level, and it had found some support. So it was a decent setup. You want to not overstay your welcome on these kind of trades because there is selling pressure. It's pretty choppy, and the trend is up, so you're kind of getting it on a dip. But remember, the support is here and has to churn through VWAP, so the ideal entry point is more closer to like 210.50-ish, and that's a big meat of the move. And in that middle of the meat of the move, you have VWAP, which is going to reduce some of that probability. So you can really only take it once it starts to confirm above VWAP. So I took it over here again at 12:45, same entry time as Meta, right? Same entry point here at SPY. Took 100 shares at 211.71. Had a dip to the 8 EMA, so that was probably another nice entry that I could have got in on. And kind of stock moved up and it kind of compressed here. I was trying to get maybe $1 in this trade, right? If you look at 212.72, there's a couple of lines over here Some resistance. It's I'm not sure if it was going to get all the way back up here, but I figured it could maybe churn up to maybe here. So looking to get maybe $1. It kind of moved up, kind of flatlined over here, 135 ish. And if you look at the market was also starting to flatline a little bit. It had one last little push up, but I ended up taking the gain at 212.11. So it took about maybe like 41 cents on this guy, which wasn't a ton. But again, I just took a win. A win is a win. And back to the sidelines. So that was snow. Did not take any trades on the choppy day. I took DJT, which was supposed to be a swing, but ended up being a day trade, so that counted. And then today on Friday, we had this gap up, broke to the gap, a bit of a bearish trend. I got into the day a little bit later, and also, like Hari was out of the chat, Dave was on vacation, Pete was out for the day, so no red traders in the chat. So there was a lot of great people stepping up. SH Kalash was stepping up. Spectre was stepping up. A lot of people were stepping up over here. So I felt that I could probably also offer some of my insights on the trade, see what I like, provide a little bit of play-by-play. I think even Dan was out. So it was like there's not a lot of veteran presence or veteran presence from feature traders or pro traders. So felt that I could step up here. So I took Apple short, and I want to explain why Apple short is actually a more advanced trade than you realize. So if you look at this D1 chart, there is no event here, right? Look at this. Look at a breakdown like this, right? Where like this is a breakdown. I don't like this tail, but like this is a breakdown in an event, and this actually has some follow through to the downside, right? Over here on the bullish chart, right here is an event, right? We've broken through horizontal support right here, right? This is a beautiful event that you could get long, and you could ride this trade up until this bearish hammer probably. I guess even more. Look at that, right? You could ride this guy up here. So there's an event. Over here, right, in this choppy mess, there's not a ton of events. So you have to be very, very nimble. Because the stock has not made some action, the volume is pretty low. Again, you got to be careful. So that was the first thing you got to notice. The second thing is going short in this chart. This stock is in a D1 compression. Look at this chart. Now, it's bearish because it's been holding this level at around 210, 212-ish, through something like that, 213, right? Been holding this level, unable to fill the gap while the market's rallying, which is bearish. But look at this line that I've drawn, right? To me, if I'm swinging this chart, Apple's got to break this line. It's got to break 192.50 or 193.50, right? If it can break that, and I get in somewhere here, I got a huge amount of downside, and I'm loving that trade. But until it breaks that, to me, it's in compression. So you have to be pretty nimble. Now, when you're in compression, you also notice that there's a lot of gaps in here. There's a lot of gaps. There's high volume candles. And if you just start drawing some lines here, right? So I drew a line here. I'm just going to draw a line just at all let's just see what happens, right? So let's draw a line. Here's a gap here on the open. We got a gap up. Here's a high volume candle. Let's draw a line at the high here. Candle after hours. Where's another gap? There's a open close. We get an open over here. There's another gap. So look at all these little lines and gaps. And now you can start to see that there's a lot of bouncing happening. There's a lot of action. There is a lot of D1 levels. So when you're taking a short or taking a long in these areas, there's just a whole bunch of liquidity in here, right? There's a whole bunch of buyers and sellers battling it out until one side prevails. The stock has to have a ton of R volume to actually push through all of that, right? Otherwise, it's just going to be bouncing around. And you can still trade the bouncing around, but you got to be extra careful. So, I'm going to also put a line here. Now, if I look at this chart, right, first thing, I'm just looking for some high volume candles. So we have one on the 14th, right? So here's a high volume candle on this low. High to low, right? So there's some high volume candles there. Another high volume candle here, right? The high and low. Here's another high volume candle. We just start drawing these, just seeing what happens, right? Start drawing these. A whole bunch of liquidity and volume that has been coming up through here. And see how there's some compression here as we're just bouncing through all that liquidity? Post earnings, look at this, right? This low, 212.16, and this high. Again, some more just high volume candles, and these touches are approximates. Now you can really clutter up your chart by drawing a whole bunch of these lines, so you don't have to draw them for everything. But my point here is that if you actually take charts with clear D1 events, you avoid all of this mishap, right? There's no 8 EMA, there's no SMA, there's not as many high volume candles you have to worry about. So the chance of success is so much higher because there's just not a lot of stuff in your way. So there's a long spiel on Apple, but it was really important because this context sets up a whole bunch of stuff. So now if I go to the M5 chart, okay. So if I go to the M5 chart here, here's a setup on Apple. So we get this nice long green candle, which is already pretty bullish, right? We're through the 50 SMA, and then we start to sell off. Now, the way we sell off is pretty nice because we kind of reverse this candle, and we're pretty relatively weak for most of this time here. The other thing that is important as well, if I just put in here, because we're reversing into the prior day, you want to have this prior day AVWAP up because this is often a level that finds some support, and it usually you'll see it coincide with some price action. So even if you don't have this up, if you're like, all right, we're compressing here, we got to break through this prior day support, and then I can get short, then that's your game plan. So we kind of get through this level, 220. This is a little bit of an aggressive entry for my taste personally, but it can work because we did get a close above this prior low. 212 is 225 candle is a bit of a safer entry, so I get long at 202.66, right? I get long here. So get long at 202.66, and here's a setup at 12:30, and here's a setup at 12:30. So I'm thinking, all right, look, this is a mildly bearish day. I'm looking for hit and run trades. There's not a ton of great relatively weak stocks. Apple has some room to the 8 EMA, which at that point was at 202 on the dot. The 8 EMA, the D1 will move as the M5 price action moves around. And as it's dropping, the 8 EMA also dropped to actually 202.87 or something like that. So as it was dropping, I actually got a little bit more room on that 8 EMA. So I'm taking this trade. I get into 202.66. My expectation is that this market needs to come in and test the low of the day and ideally break it. And then I'm going to take gains on that break because we get a break to the low of the day, we get a bounce. Break to the low of the day, we get a bounce. So it's choppy, and I need to get in after these bounces stall versus getting in when the bounces are at their trough. So I get in it, and I get an immediate production, and then I get sort of this like weird candle at 1240. Here's a candle, right? So SPY has a weird candle, and Apple's a weird candle because it's more relative to SPY. So we get this weird candle, and at this point I'm thinking, all right, well, I could take gains, but my profit target was 202. It was 202.05, so it was literally 5 cents off. And I was like, all right, at this point, I mean, Apple could probably wiggle and jiggle its way to my profit target. It could like poke through and then come back, or maybe come back down and then come back. So I'll wait for that. Next candle, we hit a low of 202.09, and then massive bullish engulfing candle here. So I was like, that is sus. And I was extra sus of this, one, because of the couple of reasons. So just look at what SPY did. SPY did not have a high volume bullish candle, tiny bullish candle. So Apple had a big bullish candle here. Almost highest volume of the day. Take out the first 2 bars, right, which is going to be higher volume. This is a really high R vol candle. So caught my radar. It's got to be smacked down pretty quickly. Second thing is the D1 context, right? Because the D1 context isn't super bearish, I got to be really extra careful with Apple. If I had a stock that this chart was something like, DJT or something that was like really weak, or if you look at something like CLX, right? Maybe I'll pull it up on this chart. Something like CLX, right? I'm going to take off all these lines because that is really hard to see. Just want to show this. Okay, right? CLX here. This is a pretty bearish chart, so you can lean on this trend over here, and it's more and this thing is more likely to get smacked down because you have long-term sellers on your side. Because buyers and sellers are neutral on a 3-month kind of time frame basis, you need to see this get smacked down. Now, we got a couple of pops over here, right? You see a pop, smack down, pop, smack down. But this is a pretty long pop, right? There's a pretty big pop, and if you even look at this pop here, 1105, see how it had this pretty big tail, right? We got a big chunk, big bite of this candle that got chewed up. So that's a clue that, okay, you can probably stick with it a little bit because it's going to get smacked down. Now, after this candle, it needed to be erased and back down through the low in 2 bars. If that did not happen in 2 bars, I was getting out of the trade. So market, pop down here, 1 bar, 2 bar. Market, I actually got it right. I mean, if I traded SPY here, I probably could have taken $1.50 on this pretty easy. A clean $1.50 if I got lucky. Look at what Apple did, right? It held, did not make its new low of the day, and test, come back, test, come back. So that was my warning sign. I also had a meeting to jump to, so I ended up jumping to that meeting. But on Apple, I was like, all right, I'm going to scratch out of this trade because market is looking good. It's probably going to cycle back up. Apple, it could cycle. The market could cycle back up. Apple could stall on this retest of the prior day AView app, and then it could, fall back down. That could happen, and I was like, I'm okay with that happening, right? I'm not going to press that. And here's an example of me not pressing, ending up working in my favor, right? If you press on every trade, I get the big wins in Meta, but I also take the big losses in a stock like Apple. So I ended up getting out at the open of this candle. I got it at 202.65, which is actually exactly the low. So I got pretty lucky here. So I got out for literally a $1, 1 cent profit. I took 100 shares over here. I was willing to take $3 of heat, all the way up to like somewhere here. And that's what something like a Pete or a Hari can take. Like they can take a massive surge up because they have confidence in their pick and their analysis, but a lot of traders can't handle that. So it's pretty tricky in order to do that, in my opinion. Ended up being the right play. I did not actually expect this massive surge in Apple, and what that told me was one obviously the market rallied too, but this stock rallied pretty strongly, and that made me feel like we probably hit some TA, right? If you get a really big rip up like this, you probably hit some T1 TA that you missed. And when I checked the chart, you see this line that I drew here. I was like, all right, well, let me look at this low of this high volume candle. 202.16. What's the low of this candle? 201.25. So that's not really coming into play. What about the close of this candle? Okay, 202.52. The low, 201.16. Okay, so 201.16. Oh, sorry, 202.16. My bad. Yeah, a little bit of a high volume candle resistance over here. There's this gap close here as well, but this high volume candle, it's like one of these, it's just like one of these things, right? Like we might break one, we might break two, but one of these eventually is going to get you, and then you're going to slap back up to the upside. So that's my guess as to what happened with Apple. Market obviously going against your favor. Stock found relative strength, by the way, before the market did, which is another clue. Like I like to enter relatively weak stocks that are dropping before the market, but if the stock starts to rally before the market rallies, that's a really big warning sign for me to get out of the trade. So a lot on Apple, but I felt like that was a learning experience because I wanted to specifically call out why it was a trickier play and why you had to be careful and be extra nimble. And again, I didn't think it could press. There's other situations where if you look at the M5 today, stock could do, it was pretty much, I think, technically valid. Yeah, technically valid at this point. And then at this point, I think it becomes invalid in my opinion because here at least you're coming back up for the retest, right? And you're still retesting this level. And as long as this retest holds, you can stick in the trade. And it could even just come here and roll down and make a new leg lower. So I was willing to give up those profits because I felt the market was about to move up and stock had gained a lot of relative strength. And I didn't like how this candle didn't get smacked down. So the price action in the market was my clue to get out of the trade and ended up working out this time. Kind of churned through revap, even kind of pretty much came all the way back up to the high of the day before having that flush all the way back down. So if you were a Pete style trader and you took it over here, right? Let's say you took it at 202. He'd probably take it like at 202.80 something. He would add it probably here at 205, right? And his average would be like 203. And then he'd probably end up holding. He's like, I'll probably hold it overnight. And then he'd actually probably exit for like a 5-cent gain or something on that position. Most people do not have those trade management skills, and they don't have the ability to take that heat where it's like, oh, this stock is literally ripping up against you like $3, right? If you're long 1,000, you're down $3,000 if you're short this 1,000 shares, and so you have to be able to add ones to there to get your average price to be, let's call it 204, right? So let's say you're short here, 205, and let's call it 203. So you're short 204, right? And then you pretty much get out over here, like 209.30. You take 10 cents on a 2x position. Very hard to trade manage that. It's really impressive to see in real time, but it's super tough to manage. Last day trade I took, I should say, was Tesla short. So yesterday, a lot of opportunities to day trade short Tesla. I missed all of them, but commented them in hindsight, which is my unfortunate favorite friend. Tesla here. This was your entry on Tesla. So the stock gapped up here, compressing for a super long time. And this is important because we had a massive move, and this long compression is the breeding grounds for a next move in some direction either way. It was wedged between both the SMAs, but as the market was dropping down, Tesla compressed. As the market rallied, Tesla also compressed. And then when it broke through this compression at 315, right over here, there was a great entry point to get in at 208.57. Now, I got in. This is a pretty bad entry for me because I chased this candle that ended up being a nice long green candle. So I got in at 297, and I was thinking I can probably take $1 on this guy, around 296-ish. Then we got another tail here, and that's actually when I scratched out of the trade because I was like, well, we got two tails here. I don't know which way it's going to go, so I'm just going to take the scratch and call it a day. So I was short 30 shares at 297. That means if it shot up to 307, I could take the max loss and it would still be okay because there's some crazy end-of-day volatility shit. Ended up flushing out over here. Kind of a hard flush to trade. In my opinion, my weakness was simply that I chased my entry, and I could have got a much better entry at 298 versus chasing mid-candle. I hate chasing mid-candle. So to me, this was a good pick. B+ entry, I would say. B+ entry, but decent trade management. So took a scratch on Tesla. Nothing too crazy, but I sized it small because it was like I'm not going to let one trade ruin all my nice gains for the week. And see if I can get a quick $30 or something like that. All right. So final trade here. I'm going to open my open positions, which is in Qubit. So last Friday, I shorted the $14 Qubit calls for 12 cents. I closed that today for 5 cents. So I took 7 cents of credit on those short calls. Still holding the original position, which is the $9, the July 18th $9 calls that I took for $5.20. I took it over here on May 23rd. Stock is chopped around, but it's preserving this nice uptrend. It is kind of choppy, so my thinking here is like, I don't know, if I draw like a high plus trend line, maybe this is coming into play here. That's an okay trend line. Oh, I didn't draw that very well. Maybe here. That could be a better trend line. So maybe that's a pretty nice target. I also have this gap fill that's coming in over here. So to me, I think I have room for a nice push up here, maybe to like the $15 level is where I could take gains. I did not take a short call because I'm going to be going on vacation starting Wednesday of next week. So I'll do a video maybe like Tuesday or something like that, like a shortened video just about my trades. So I'll see if I take any trades or not Monday or Tuesday. I'd like to get a win if I can for that week just so I can have another positive week. But if I don't get it, then I don't get it. So yeah, but so right now I'm down. I think it's valued at $4.70, I believe. Let me just check the portfolio. Yeah, no, it's down $4.70. Now I took it pretty much at the same price, so basically I've lost a little bit of value due to some time premium decay, but I didn't have a ton of premium when I took it. I think I had like maybe 70 cents of premium because think about it, I took the $9 calls for $5.20. So if it was at parity, it would have been $14.20. The stock price was $13.70. So I need the stock to move 50 cents in order for me to break even, which is about $14.20. So don't have a ton of premium because it went very deep in the money, which is a really good way to negate these high IV stocks. And I was selling some calls against it because it was choppy. So I've already, if I look at just these last 2 weeks, and I filter for the diagonal. So yeah, I've cut down my premium. Out of those 50 cents of premium, I've cut down 26 cents. So I've cut down half my premium by just shorting some calls against that. So that's a nice way to just kind of take some money, and you can short them at price targets. So I knew if it went up to $14, I could still get a profit of the whole position. I shorted the week before was like $16, so I also got some decent decent premium on that. And if I had the whole week here, I'd short another one probably at my price target at like 15.50 or something like that. I wonder if it's showing these calls here. Yeah, so if I took the June 13th, if I shorted I'd probably sell the 15.50 calls for like 30 cents, right? So I get a nice amount of premium, and then if I don't get it, I would get out of the position. Yeah. And it's also after this nice heavy volume move and volatility spike, those premiums are going to be a little bit richer on the call side. Now, on a technical basis, the nice thing is that we've actually gotten through this line in the sand, which was this gap fill move here right at 1275, call it resistance. We poked above it, we got slapped down, but we formed these higher lows. We rallied back up, and we got back up over here, which is really nice. And we held a lot of these gains. We held the majority of these moves, which were preserved. So I really like that, and I'd like to see this stock be able to add to those gains on another nice, huge rip up. These rip ups are huge. We're going from like 1188 to 1360. Yes, this stock can move like probably 10%. Move like definitely $2 on a rip up easily, right? Easily $2 on a rip up, if not more. 10 to so probably $2. So if you think about where I'm drawing this high plus trend line, it's closing at 1376, right? This stock gets to 1560. So if you get a nice jump up over here, you're getting that $2 move is very, very possible in a day. Now, can it stack these back-to-back green candles? It's unlikely. All right. Now, if it does stack it, then we're sort of off to the races. But right now, every big move has been challenged to the downside. So we got to see if it's able to add to this. I'm going to start to take out of this gains, and if I can close that before we go on vacation, then I'll be in good shape. So this is my only open position right now, and I'm going to see if I can close it, but I'm fine with holding it over vacation. So that's it. So, next week, again, keep it light. We've gone through a nice round of economic releases. Market is mildly bullish short term, but you got to be careful. Get in on these dips. Just stick to a lot of day trading. I think a weekly at the money could work on snow. That's probably what I'd recommend. And that's it. Just be one step ahead of the market, and just kind of be guarded and try not to lose your money in marginal situations. Thanks for watching, everyone, and I will catch you all in the video next week.